Awesome. Well, let's go ahead and dive in. We have a good crowd on here. For everybody that just joined, welcome to the Courageous Minds Only community. For those of you who don't know me, I'm Jason Hauer. I'm co-founder and chief growth officer at the Garage Group. And our mission really is helping big companies take a startup-inspired approach to solving their innovation and brand strategy challenges. So that's my day job. And then I'm also the founder of the Courageous Minds Only community. And we really created the Courageous Minds Only community to give corporate leaders courage, inspiration, and ideas for building the future in an uncertain world. And just super excited that you're here today. And we've been able to impact thousands of leaders in New York, in Chicago specifically, through in-person chats and with COVID and other things like we're adapting and changing a little bit here too. So we're actually going to go to a bi-weekly or bi-monthly chat setup here. So excited to do that and excited to be able to reach people from around the globe. It was incredible in terms of the registration was across the country and parts of Europe, et cetera. So just excited for everybody that's a part of this. Looking forward to a great conversation. And couldn't be more excited to dig in today's topic, which is predicting the future of your business and industry with three leaders and investors I've gotten to know and think very, very highly of. Gautam Gupta from M13 Ventures, Luke Cherrington from ZX Ventures, and then Dave Knox, author of Predicting the Turn, among other things. And so before we dive in, just wanted to remind everybody, if you haven't been a part of a Courageous Minds Only chat before, this isn't a place where you just come and listen and kind of sit back. This is really about come, learn, get inspired, but actually go do something. So our call to action is at least take one thing out of this conversation you're going to commit to starting to use this afternoon, today, whatever time zone you're on. And just would encourage you in that, and I'll remind you, is we're setting up this conversation, the one thing that I'm really keen to learn more about is how can I take a VC mindset as well as some of the disciplines these guys use and apply it to how I can be a better leader to be able to see the future and see where things are going. So that's one thing I'm going to take away. We're going to have like 40 minutes of conversation, and then we'll dive into Q&A. I would encourage you, as you're listening to the conversation, if you have questions, load them into the Q&A, and then we'll get to those as part of the combo. So you guys ready? Awesome. Yep. Dave, Gautam, Luke, let's start by you guys just sharing kind of your backgrounds and then what you're up to today, just to give everybody context for where you guys are coming from. Gautam, you want to kick us off, man?
Yeah, sure. Thanks for having me. So my background, I started my career in venture capital, working for a firm called General Catalyst. Joined them basically out of undergrad. So it was the first job that I had ever had, and figured why, kind of be an investor when everyone on the founder side of the table seems to be having all the fun. Little did I know how hard the founder side of the table was, but I've left General Catalyst in 2012 to start a company called NatureBox, which is a multi-channel brand of snack food. We built that business up to about $50 million of annual revenue. I was CEO for the first 6.5 years, and then brought in a new CEO about 1.5 years ago, and took some time off. And then about a year ago, joined M13. And M13 is a very unique venture capital firm. We call it a venture engine because one side of what we do is invest in companies, very similar to other funds that are out there. The other side of what we do is we actually help founders and sort of roll up our sleeves and build companies alongside founders. And so we've partnered with Procter & Gamble to take some of the sort of R&D and technology from P&G and start building companies around that. So happy to be here and looking forward to getting into the discussion.
Awesome. Luke?
Yeah, sure. So not a totally dissimilar background. I actually worked in private equity very briefly after college, and then was a founding part of a couple companies out in California, more on the B2B side for a bit. Down in Southern California and Los Angeles. And we actually exited one of those businesses. It was in the HR tech space only after about a couple years. And I spent some time trying to figure out what I was going to get into next, and got looped in with the team over at ZX Ventures. So ZX is the venture capital innovation kind of creation engine of Anheuser-Busch InBev, the massive beer company. But I do not just invest in beverage companies. I pretty much only invest in technology companies, pretty much all B2B tech, where there's businesses that can help Fortune 500s make, move, sell products in a more efficient way. So a lot of things in logistics, supply chain, back office, along those lines. Another thing that we're kind of working on in ZX and potentially as a collaboration there, I was working with a lot of other large corporates and looking at these sort of syndicate models for collaboration and co-investment. So I spent a lot of my time talking to my counterparts at Nike or P&G or any of these other big businesses that make, move, and sell products, and then talking to a lot of entrepreneurs and helping them grow inside those organizations.
Yeah, Dave.
Hi, everyone. So Dave Knox. So I'm in the kind of third part of my career, as I call it right now. So started Procter & Gamble, ultimately was one of the co-founders of the corporate digital strategy team back in 2008. And really what that meant was running a lot of our relationships with Facebook and Google and Silicon Valley. And included in that, had a chance to do the off the balance sheet investing through a group called P&G Productions, where we were doing some corporate VC and also some alternative revenue projects. Did that before leaving to be the chief marketing officer for a digital innovation agency called Rockfish. Ended up taking that company, growing it about 10x, and ended up selling that off to WPP in 2017 time period. Also during that time was the co-founder of Brandery, which is a startup accelerator that we started here in Cincinnati. Since leaving WPP and kind of stepping back from day to day with the Brandery, I spend my time in a few different buckets. One is Predicting the Turn, which is a book I had come out a few years ago. I also do a podcast and a Forbes column along with that. Second, spend my time working with a lot of high growth startups on building out their marketing organizations and what should that look like tactically. And then final is rolling up my sleeves as an investor. I have a small seed fund that I help co-found, have personally done angel investments in way too many companies dangerously, and then do a lot in just working with startups in general, including my latest venture where I actually bought a small consumer packaged goods company last July. And I've been working on relaunching that and rebranding it.
Awesome. Hey, so I kicked us off with this, but I mean, we believe from the Garage Group perspective, there's more uncertainty in the market than ever, and leaders have got to practically understand what's coming so they can make the necessary changes to their products and businesses and business models to stay relevant. And over the holiday break, I was rereading Dave's book, Predicting the Turn. I highly recommend you guys check that out. And just was struck by just the thesis around venture capitalists being amazingly good at pattern recognition and being able to start to see the future and invest and fuel the future. And Dave, can you give us a quick primer in terms of Predicting the Turn and then just that VC mindset? And then would love to hear from you guys in terms of how does that come to life in terms of how you guys think about investing in general. But Dave?
Yeah, so the basic premise of Predicting the Turn, the reason I kind of wrote it and kind of have had that as the platform is we had a period of time there when I think big companies were over celebrating Silicon Valley. And what I meant by that is everybody was, how are we agile and how do we follow lean startup? And it was all of these things were meant to be writings about how you build startups, and they were getting misapplied in the world of corporations. And so what Predicting the Turn is about is how can both sides actually learn from each other and understand all the changes taking place, where the business world is going, and how can the activities of startups and venture capitalists be combined with the activities of the Fortune 500, because after all, the Fortune 500 were entrepreneurs themselves at one point. And how do you apply that? So some of the concepts, I think we'll dive into talking about them here, is the concept of second order consequences is a really big one. Too often in business, we have our blinders on of what's that direct competitor that we're looking at. But some of the biggest changes that come out are actually because of adjacent innovation. partners of ours that either get disrupted themselves or change their business. How can we stay atop of that? What does that mean for us, and what do we do with it? It's things like market intelligence. When I talk to a lot of corporations, the first default that it goes to is, well, we have a corporate VC group that does that work, or we have an innovation group that does that work. Well, it's the wrong way of thinking about it, because it's actually the job of everyone in business to think about where your job, your business, your industry might be headed, and connecting the dots. Because I think one of the greatest mistakes we've ever made in the world of corporations is thinking of corporate venture and startup engagement as a financial activity. We miss the connection with the strategic and what that can mean. Because I know Luke and Gautam will talk as, they do the venture world. You look at 1,000 deals and you might do 5 deals. The funnel is extremely, extremely big and extremely tough to get through. But the market intelligence that you get out of that, and the depth and breadth and the pattern recognition, that can give you insights that are amazing and that will help inform future decisions. Corporations need that same approach. It's not about finding that one deal and that perfect deal, but how do you learn from every single interaction that you have?
Yeah. Thanks, Dave. And so I'm curious from all of you guys, maybe Luke, you jump in on this one first, but how are you able to, in terms of your interactions with people, the disciplines that you have, how are you able to start to see the future and patterns as it relates to how you invest?
Yeah, for sure. So I think, I agree with everything Dave said, just from putting my corporate hat on. Look, I think one thing that's pretty interesting is that when you're thinking about sourcing as a VC or just as an investor, because I've done that individually as well, you're kind of wandering the desert because you're out there maybe I'll make some connections with this accelerator here if it's early stage, or this VC here if it's mid or later stage. One thing I think that corporates specifically have, given the question, that's a little bit of an unfair advantage, is that we kind of get to see what's happening inside of corporations and the companies that are solving problems for corporations pretty quickly. And frankly, that's that's a little bit of an inside knowledge to know, oh yeah, this is a company that we're really going to double down on, or this specific area in logistics is going to be a super critical area to reduce costs or what have you. So I think, in terms of kind of seeing what's coming and staying up to date on things, why I think it's, of course, table stakes that anyone that's investing in a market should keep abreast with what's happening in startups and, go to demo days and talk to VCs and talk to accelerators. I think that from a corporate lens, a lot of what kind of comes in is that you actually get to see firsthand what the corporate demand is and kind of see how the pilots are going and see what's getting traction. So, we've really focused on scaling that across other corporates as well and talking to the counterparts there to really see how that's working. So for me, that's how I tend to kind of try to stay up on things, is keeping the connections inside of ABI and then inside of other corporates really, really top notch. And that frankly is my sourcing pool in a lot of cases and deal flow.
What in those conversations, what are the things that you're trying to learn? Obviously, yeah, you're in the know for sure, but what are the questions you ask? What are you trying to learn?
I'd say, number one, and it's almost stupidly simple. It's where are you spending money, right? If you're a corporate and you say, oh yeah, we have this huge initiative around, I don't know, water or whatever else, sustainability and water, which I think is amazing. ABI has some phenomenal initiatives on that front. Well, are you actually spending money on that, or are you doing a lot of PR around it? And I think, and again, in ABI's case, they're spending a lot of money on it, and it's a huge initiative. But you get to see inside of corporates that when times are hard, innovation budgets get sliced. A lot of times new initiatives get shut down. These things where they're actually saying, oh no, we're going to double down on that. It's going to drive cost savings or what have you. A lot of times that is pretty key for seeing, for asking them where they're actually going to spend capital. And then the other thing is pretty much all of these organizations inside of corporates have, a 1, 3, and 5 year plans where you can kind of say, okay, what's the future look like, right? They know a lot of the logistics and supply chain leads know what companies they're thinking of bringing in, if it's autonomous or, smart trucking or routing or what have you. So I think it's really getting hands-on with like the business operators and the business units, as opposed to say people who kind of see across the entire organization to see like where they're spending capital and how they see kind of the world going for their group.
Got it. Gautam, what's going on? What are you thinking about, man? What are thoughts and ideas you have?
Yeah, I mean, look, I've spent most of my career outside of big companies, right? So, the entirety of my career has been around investing in companies or, running a small company. And so, I think the thing that we figured out at NatureBox, and, I think it's obviously maybe harder in some companies to do this, is just to implement a test and learn approach as quickly and as soon as possible, into the culture of the company. And so, I think what we became very, very good at NatureBox was just testing new ideas, not just at a product level, but at a, back-end technology level, new features exposed to the customer, all kinds of things, and being willing to fail fast. And I think, as a startup, obviously we had less, hoops to jump through and sort of fewer people to coordinate around. But I think, it does speak a little bit to the culture of an organization or, a group of people within an organization, being able to adopt this kind of test and learn mindset, and just really reduce the cost of failure within an organization, right? And so I think that's what we got really good at, is we basically said, look, in traditional CPG, it takes millions of dollars to launch a new product. How do we dramatically reduce that to $5,000 to $10,000? At which point you can actually start to test things much faster, and you don't care as much about failure, right? So.
I'm curious, like on that, because it's interesting we definitely with our clients, we cast that vision for sure. But even in the test and learn, they want to potentially do like one loop and then it scale the thing. And thoughts from you, but also like Luke and Dave too, like how can you really build a test and learn mindset and capability that is sustainable versus it's an interesting method. You use it once, but then you just go back to what you always do.
Yeah, I mean, I think a lot of it comes down to you have to change the way the organization perceives and feels failure, right? Because, going back to my point, if a new product launch or getting something out the door costs as much as it does today, that in and of itself is a disincentive around testing. And so even if you push that first test or the first few tests through the door, by saying, by just sort of commanding that and sort of saying that that's what you want to do, it isn't set up for sustainability, right? Because the cost of failure hasn't changed. And so I do think you have to structurally change how you look at these things, how you go to market. In our business, it was a lot easier because we're a direct to consumer business. So the cost of sort of putting something on a website and testing it for a few weeks was minimal, right? Trivial. But I realized that there's a lot of plumbing that goes into doing this work at a larger company, but I think that's the core of it, is you have to change the way the company perceives, the cost of testing something and the risk of failure.
Yeah, and just to riff off of that, I mean, I think the huge thing is like defining what you're actually trying to do up front. If you're saying, hey, we want to launch $1 billion brand in 3 years, well, then you should just do a line extension to what you're already doing, because that's the only way you're going to do that. If you're fundamentally saying we want to like create new products and like totally new out there things that there's not, demand for, you have market uncertainty or you have technical uncertainty, that's going to take longer. So, I'll just tell you quickly what we've done at ZX from an innovation perspective, like creating new businesses. When I first joined, my main focus was like, how do we kind of launch companies inside of a big company? And I think that we structured things in a lot of ways in a pretty good way. It was separate from the kind of core ABI business. Our whole focus was around like bringing in these different ideas, validating the ideas, not like a stage gate model where it's like you come in with a blue box and it's focused on execution, but you're actually saying, hey, I have an idea. I want to validate that this is a problem we're solving and that's something we should actually create. And then your metrics change completely because they're more tied to learning as opposed to execution. And that kind of mindset, and it's okay to kill things, right? If it comes in as a blue box and it goes out as a blue box, you didn't do the work, especially for these things that are a little more out there. So I look at it as being like complementary to traditional innovation processes, not competitive. It's just a different engine for like a different type of thing that you're looking to do. But I think Dave's point earlier around like, lean startup, let's be lean, let's be agile. Like that's how you launch a company. And those are best practices unquestionably that can be applied to these new innovations. But if you try and do traditional corporate innovation in that way, it's not going to work because it's just not the right vehicle for it. Like if we're doing Bud Light to Bud Light Lime, that's great. We should just go do that. We know how to do it, launch it. But if we're extracting protein from spent grain and seeing if we can launch a candy bar line or something like that, we have none of those muscles there. So like we need to have fundamentally a different process for that to kind of move it forward and protect that from the core.
Yeah. Dave, what do you think, man?
Yeah, I mean, I think it's connecting the thread of both of what the guys said. It's the mindset is of the culture that, so often in corporations, we think of a test as being a test, which means it has a start and an end. And you then have to digest and share the findings and do all that. And that formalization, while that's awesome if you're copy testing a TV ad or something else, that's not the culture you need when it's an iterative of every single day. So I think that testing mindset and that culture isn't about we're doing a test and then another test. It's every single day you're experimenting. And some of those experiments will be more formal, others will be more casual, but it's that behavior of just twisting and trying and just doing stuff different. That's the mindset and the culture where it needs to start, which seems like a small step, but that behavior will start having a lot bigger impact.
Yeah. We were talking before. Oh, go ahead.
Oh, sorry, Jason. I was just going to chime in on one thing. I think Luke said something really important that I was just going to double click on, which is sort of scale, right? I think, large companies often shoot themselves in the foot around the need for scale, right? No big idea starts out big in my experience, right? Like literally, if I think about 15 years of venture investing, there's not a single company that became a multi-billion-dollar business that on day one, you looked at that business and said, oh, it's so obvious, it's clear, like this is a big idea, right? These things, just these ideas and products often start out small. And so I think the sort of mistake is to create a lot of friction around this, around sort of a necessity for scale. So I just wanted to double click on that because I think that's been my experience, in relationships with large companies is that they just can't start to think without the constraint of scale.
Yeah. We were talking before of it being, again, like blogs and trend reports and things are interesting and they're helpful, but a lot of people hide behind those and don't actually get out and connect with people and roll up your sleeves, helping a startup, whatever. Like, so curious from your guys' points of view in terms of if you truly want to understand where things are going, like how does that human connection and conversations, like how does that factor into how you guys formulate where things are going and how you think about making investments? Dave, you want to start there?
Yeah, I'll jump in. Yeah, and it's, what Jason's talked about, it's one of the things that's been the most interesting. As I do Predicting the Turn, we do a podcast every week and sitting down with VCs and entrepreneurs and big business leaders. And almost to a T, it's the big business leaders when they talk about how they do their learning. It is from secondary sources. It's digesting those blog posts and those reports and the things that have been published. And it's the VCs that talk about the learning that happens every single day. As entrepreneurs walk in, they talk with them, and they're learning in every single interaction. It was one of the VCs I respect the most who kind of said, I have a really fortunate job because I have the smartest people in the world walk into my office every day and tell me how they're going to change the world. I just have to be smart enough to connect the dots of those. And that's, I think, the job that we need to look at is as a corporation, how do you start doing that? And I'm personally a big believer, whether the science holds it up, but the Malcolm Gladwell 10,000 hours of practice. Like, you got to get out there and start learning and doing and seeing. And that's why there's a value of getting involved in helping entrepreneurs. Getting out there and working with the local accelerator or incubator, or name any different thing out there. You shouldn't be doing those programs to find the next great idea. Like, that's what VCs do. Like, let them find the next great idea and put the money behind it. You need to be learning, like, how's an entrepreneur think? Like, why did they decide this thing that they've decided to, instead of making a salary someplace else, they're going to throw it all on the line to try and go after this idea? Like, there should be a pretty good conviction of why they think that. And if you can uncover that and start learning, why do people get these convictions? That's really, really compelling to be able to do. And the same token is take advantage of the data that's out there. You can go subscribe to stuff that's announcing all of the fundings that are going on, and you can start connecting the dots yourself of like, oh, wait, why is all this money flowing into this one space? Like, what's that mean? What's it look like? Go on to stuff like Jason and I talk all the time about Angel List. You don't have to be a millionaire or a billionaire to start investing into the world of startups. Like, you can go back somebody's syndicate, put $1,000 behind a company, and start learning of how do you evaluate and how do you look at stuff. I personally, I've thought about my first $25,000 I put into Angel List startups as a tuition check. Just like I would spend that money maybe do an MBA or something else. Like, I'm going to put $1,000 into 25 startups and do it. That great. If I make it back, awesome. But more importantly, can I learn and enhance my thinking by doing stuff like that? So,
Luke, Gautam, builds thoughts, man.
Yeah, sure.
Go ahead, Luke.
Luke, go for it, man.
Sure. Yeah, I totally. I literally had a note down here of we're kind of the luckiest people in the world. Personally, I think that how does one want to spend their time, genuinely? What would you really like to spend your time doing? I tend to like talking to interesting people, and that's kind of me. So I don't really care if that's somebody who's a painter or somebody who's building a company, but generally it's people who are spending their time doing the shit that they want to do. And to me, that's kind of the best way to spend time possible. I think that as a corporate, as a corporate, you kind of, if you don't have the right people that want to do that want to go to demo days and want to do stuff, then you need to hire them. Because otherwise you're not going to really get that mindset in place. If somebody's saying that demo day is at 6:00 and that's the end of the workday, that is not the right person for you to have in the organization focusing on working with startups, because I don't know, I've had a lot of my best meetings or insights or conversations over, a beer that turns into dinner that turns into 6 hours of talking at the end of the night, or something like that. So I think that's one thing. And then I think the other piece here is just if you genuinely want to flex those muscles, the best things to do is to it's Techstars motto, at least, of give first. Which I completely agree with. I mean, personally, I'm a mentor at a dozen accelerators. A lot of these are early stage companies that I'm never going to invest in, but that potentially longer term we could, or help them get their first corporate clients and help them kind of get in the door with people, give them feedback based off the fact that you've seen 10,000 pitches before, and how they can potentially raise capital. I even think that there's benefit to working in kind of ancillary industries, right? So I focus a lot on B2B and back-end tech, but I'm also, an investor in or an advisor to a beverage company, do some things in esports that aren't directly related to what I do now. And I think that it's just painting that overall picture of if human beings are not going into the office anymore, maybe that impacts, in a positive, video calls, but maybe in a negative that impacts business travel and airlines, which then will impact, CRM systems for that. So I think it's just the more you can kind of immerse into that world. For me, that's as many people as I can possibly talk to about what they're doing and why, but better. And then just having a very expansive mindset to be want to do that and want to help companies that are in the early stage.
Gautam?
Yeah, the only thing I would add, I think both Dave and Luke articulated great points, and the only thing I would add is just my piece of sort of advice or encouragement would be to take a beginner mindset. I think often coming to new ideas, especially orthogonal ideas, there's a constraint around expertise, actually, right? The more you know about a subject matter, the easier it is to dismiss something that is truly different and unique. And so the one piece of advice would just, as much as possible, try to come to the world of kind of innovation and startups with a beginner mindset, and just, sort of compartmentalize the experience that you have in the market or in the industry.
Yeah. I'm curious, like if you put yourself in the shoes of, let's call it like a brand manager, somebody that's the head of insights, they're working in the existing brand system today. But then a lot of what you guys are suggesting, I think, is amazing. Like if you were in their shoes, like what would you be doing to get insight? Maybe start with maximizing what you have access to from the corporate perspective, but then whether you're in Chicago or New York, what are some specific tangible things that you would be going to do to get insight, to get outside the walls of the corporation and help startups?
Yeah, sure. I think one thing just off the bat is reach out to accelerator programs and tell them you want to help their companies. Very rarely are people going to turn that down. And there's a bunch of awesome programs out there. And that's just a good way to understand how startups think. Obviously don't tell them what to do. There's a fine line of mentorship and helping and doing that. But yeah, I think that's kind of number one table stakes to me. And then the second thing is, look at the companies. It's pretty easy. You just look at the companies that are the most successful companies in your industry, right? So if you're let's say a beverage company, you see that Spindrift is doing really well or something like that. Talk to all their investors. All this information is generally public. Ping them and say, hey, look, we might buy companies of yours in the future. Can I just talk to you about what we're doing, what you're doing? To me, the people who are building things and the investors who are helping those things be built kind of have an extremely vested interest in knowing what's happening in the market at any given time. And from an education perspective, they tend to be pretty open to talk to big businesses. And so I think that tends to be a pretty good avenue for just getting started and having those conversations.
Yeah. The only thing I would add is I think this is a world, comprised of many people who think about how to solve problems. And so the only thing I would add is as you go have those conversations with accelerators, investors, startup founders, talk openly about the problems that you want to solve, right? Or the market that you're thinking about, or the product that you had high hopes for but isn't showing the signs of success that you had hoped. Because I think often this is a world of people that are attracted to solving problems. So if you start to put sort of out there in the ecosystem what you need help with, you'll often find people kind of knocking on your door to help solve those things.
Sure.
Yeah. So I think there's two things I'd kind of encourage, and frankly, it's what I did when I was sitting as a brand manager and kind of getting into this world. The first and foremost is understanding that relationships in this area are different than the relationships you're used to. Whether you like it or not, if you're a brand manager, most of your relationships are transactional relationships. You pay your agency, you pay your media companies, hell, you even pay Facebook and Google. Just because they take you out for a bunch of drinks doesn't mean they're your best friends. It's transactional world that exists there. The entrepreneurial world is a relationship world. And the relationships with investors and with entrepreneurs and with everything else, you need to build that relationship capital before you can build transactional capital. And so get out there and figure out how to do that. If I look at the venture relationships that are most valuable for me today are ones that were built, to Luke's point, over drinks. Gautam and I sitting down in Sand Hill Road, having drinks with, some great guys back in 2009. You build those relationships. We didn't have anything that anybody wanted out of the other person at that time, but you build the relationship and you invest the time, the money, the effort, and things will come out of it. That's a big mistake I think people make. And you make it by outsourcing all of this activity and not taking advantage of these opportunities to have those relationships. I saw it just, recently there was a very large company that did a competition to get startups to apply. And they only selected a few that were finalists, but then they had the outside company that was running the back end for them be the one that sent the rejection note to those other entrepreneurs. Like, that's the stupidest thing you could ever do. Like, you should be building a relationship with everyone that took time to engage with you, not just the ones you somehow decided were the top ones. So you need to do that. And then the flip side is, I'd say, remember the value of being a hobbyist. The cool thing is, if you're a brand manager right now, go try and launch a business on Amazon. Go stand up a Shopify site. Like, go do these things on the side that can help you learn about what an entrepreneur is going through, because it's a really unique time that you can spend a couple $100 and go practice that stuff. Remember, Steve Wozniak was a member of the Homebrew Computer Club on the side. The best craft brewers were brewing at home on the side. Like, be a hobbyist and learn, because that can give you some really unique insight then as you go talk to entrepreneurs and do stuff on the day job.
This is great, guys. Hey, just a reminder, we're going to jump into a Q&A in a little bit. Go ahead and everybody's starting to put them into the chat window. So if you have questions, throw them into the chat window and we'll get to them. On the previous topic, John had shared that they have a corporate venture capital group as part of his organization, but there's really no interdependence with the rest of the organization. None of those insights get shared, et cetera. So if you're in that brand management insight role, maybe you're even the GM of a business, and you have a corporate venture capital group, you have an M&A group that's primarily focused on startups. Thoughts and ideas that you guys have for tapping them to make sure that insight is coming back to the base business as well. Is that just, Dave, to your point, proactively building the relationships, or you set up share outs? How can the brands and existing operating units access those insights?
Yeah, I think it's showing interest on both sides. I go back to a weird parallel, but back in 2003 when I started on at P&G, I asked a question about, the voice of the customer. How do we know what people are saying back to us on our products? And I found out that the brand marketers never went and talked to the customer service people. Go talk to the 1-800 lines and everything else, and just find out what people were writing back to us. And I just reached out to my counterpart over there. They said, we'd love for you to come over and spend a day and just jump on the phone, listen, and hear. I think that same activity of how can the brand marketers reach back with the VCs and build those relationships? Because, Luke made the point earlier that there is so much activity going on in a corporation that it's really tough for that single person sitting there doing corporate VC to know all of the activities going on across the corporation. If you raise your hand and say you want to help, you can bring great insights of what the corporation is doing and really get that connection. It's one of the reasons, I called out our friends at Nestle as an example in predicting the turn, because when they staffed their Silicon Innovation Outpost, they staffed it with people from the corporation that knew how to go back in the corporation and find people and find who to engage. And that's super valuable because that's how you get action to take place, et cetera. So you want to do those type of things and just raise your hand. And I think you'd be amazed at the sharing that could end up happening by doing that.
Yeah. Luke, at ZX, how do you guys share what you learned back with the mothership?
For sure. So totally. That back and forth is necessarily always a challenge. The number one thing that I see works best is just adding value from the get-go. So, I have a really close relationship with our logistics and supply chain team here in North America. With those guys, I've gone into their office in St. Louis and sat with them all day. I've said, look, who are you working with that you think is interesting? Let's fly them in here for a super day. Who am I seeing out in the market that I think could be selectively bringing you companies that are very clearly validated by other corporates? You start to kind of start looking at the things. And frankly, these people are better they know what's happening in the logistics and supply chain space better than I ever could. They've been doing this for 25 years. It's the absolute killer people you would want on a VC team. So I think if, those same relationships exist from a direct to consumer lens and from a, marketing lens and a, back office manufacturing warehouse lens. So to me, I think I've realized how intelligent all of these people are and how much they know the markets that I'm interested in. So if I can go to them and say, look, what are you seeing? And then let me selectively bring you companies with a very clear reason why. Hey, I think that Leaf Logistics is a company we just invested in. I think that they're doing awesome stuff. They're connecting groups of corporates together to do backhauls. We see this as an open area. You said that an area you're interested in is reduction of exposure to the spot market in trucking. This seems to fill that need. I do that very selectively, like one a quarter for things that I'm really interested in investing in. Because what you don't want is just to be like, hey, here's my cousin's startup, run a pilot with them. I might have the unpopular opinion to probably everyone on this call that I don't necessarily think that corporates and startups should work together. What you get is a corporate that says, hey, I want a blue box. The startup goes and builds it, and the corporate changes their mind and the startup goes bankrupt. I think that, there's an area definitely to collaborate more in the slightly later stage. But I think that the super early businesses, it's more of just mutually learning and understanding what the needs are without an expectation for commercial relationships. So I think, in terms of talking to the companies inside of the organization, bringing them some of these maybe more mature businesses who can definitely run and scale pilots, I think is pretty key. But yeah, just adding value from the get-go to those internal business partners and telling them hey, I want to help you find companies that will solve problems for you. If they won't take a meeting for that, then they're going to be worthless, right? So it kind of gets you in the door with these people and gets a conversation going.
Gautam?
Not much to add there. I mean, I think the one thing I would just say, just to kind of validate something that Dave was saying, is the venture side, being in a venture firm, we want to talk to the business unit folks, right? The folks that are running P&Ls. And so, we value that input. And so, I mean, I think whether you're in corporate venture capital or you're in a business unit, I think there's significant amount of value that can be contributed to a startup. And so, no doubt in my mind that other VCs, other startups would want to talk to you regardless of kind of where you sit in the organization. So that's the only thing I wanted to double click on.
Merging a couple of questions and thoughts, I think the whole idea of e-com and DTC, Gautam, what you were talking about with NatureBox, I think is super interesting. I think just a number of conversations from a Garage Group perspective that we've had with clients, there's in some cases, they see the opportunity to leverage it and it's an interesting thing. But I'll tell you, there's a lot of people that we've talked to that either see it as DTC and e-com, it's not kind of my part of the business, somebody else is taking care of that, and or they maybe feel threatened by it. And if you're in those roles, whether it's insights, brand management, et cetera, what's the encouragement for them to see that as a massive opportunity to continue to get insight and continue to move the business forward? How should they be thinking about that? If you guys were in those roles, how would you guys be thinking about it?
Yeah, I mean, from my perspective, the way I would be thinking about it is what's the cost of being wrong around e-commerce? And I'm sure 10 or 20 years ago, nobody thought people would be buying CPG products on Amazon. But Amazon's going to drive more than half the growth in the CPG world over the next 5 years, and only continues to accelerate because of COVID. And so, I mean, I think the thing I would posit to CPG, companies or executives would be, what's the cost of being wrong on that decision, right? I think it regardless of whether you think it's a scalable opportunity or not, and this gets back to, the constraint of scale, but regardless of where you sit on that fence, it's a capability. And I think we can all agree it's a capability that you want the organization to start to build, right? And so, I view it as it's sort of a no-brainer to me that some part of your effort should be focused on building this capability, regardless of whether you view direct-to-consumer or e-commerce as a channel that can ultimately scale, because the cost of being wrong is just too great. So that's kind of how I would view it.
Yeah, and the two additions I kind of put on that, because I think it's a great frame to have, is investors think with you're making multiple bets. You know that every single one is not going to be right. And I'll use the example, one of the companies I worked with about 2 years ago is a company called GoPuff, and was introducing them to a lot of CPG companies. And at the time, they were in 24 markets. They were just emerging. And time again, the answer would be, well, the scale's just not there right. It's just not, what do we do with it? Well, fast forward in just 24 months, they're now in 125 markets. They've raised $750 million from SoftBank. Like, they matter. And they also remember the people that weren't willing to talk early on and the ones that were. And those that took the early bets, there's a loyalty there. And you miss it now. And so the cost of being wrong in that, there are going to be some CPGs that miss out on that channel in a massive, massive way because they were thinking about the scale today instead of the scale tomorrow, which I think is just a horrible mindset to have when you look at it. So you need to think about those. How can you place the bets? And I think then the second one is COVID should have opened our eyes, the danger of over-reliance on a single channel. I've had more businesses than I want to think of that they had a single channel that they relied upon, and that channel wasn't an essential business. And guess what? They had 0 sales for 2 months, and it was outside of their control. So you need to be able to have multiple legs of your stool because you just don't know what the world's going to throw at you. So if you're not putting yourself in that control, you're asking for a whole lot of hurt.
And I'll just kind of add one stat. Sorry, Dave. I think the GoPuff story is an incredible one. Even a more recent stat is, over the last 2 months, Instacart has overtaken Walmart as the number one, in terms of market share of online grocery, right? And so I just think the world is moving faster than ever away from atoms to bits. And if you're not playing that trend, I don't know what more data you would need to be convinced of that, right? So anyway.
That's awesome. Luke, any builds?
No, I mean, look, we've been really active in the CPG space or in the DTC space for a while. We were early investors in a company called Rappi, which is like Postmates for South America. There's some nuances associated with the alcohol space where you can't really do that as much in the US. But no, I think if you're a major CPG and you don't have a significant like tens or hundreds or billions bet/initiative in e-com, you're probably too late. And please let me know so I can short your stock. It's like a no-brainer. It's like how people are going to buy things in the future. You need to be working on it, right? So,
yeah. Sarah's a question. Love the relationship point and totally agree. How can we better include more folks who bring the diversity of thought and experiences we need for future innovation, particularly for those who historically haven't had much of a voice in the VC world? Any thoughts on that, guys?
Yeah, I'm happy to chime in kind of first. I think, tactically, some of the things that we're thinking about are just, how do you, historically, entrepreneurs have needed introductions to get meetings with venture capitalists. And that's been a huge part of sort of the process that is raising capital. And so, tactically, we're thinking about, how do you make it how do you lower that sort of bar and just make it easier for folks to connect. And maybe not require introduction, be more open to kind of cold email and cold inbound. I think we're also just thinking a lot more about, how do you build relationships into communities and geographies that maybe, 5 or 10 years ago just weren't sort of the core of where venture capital was being deployed. And so that's partnering with accelerators who, may be in geographies that we haven't been present in previously. And so, I think there's a lot of tactical kind of on the ground work, but, it's got to be a dedicated focus, I think. If it's not, it's not clear to me what would change. So.
Yeah, I'd agree. I mean, I think that the historic way is if you want to talk to me, get a warm introduction. I think that, as VCs or as corporate leaders, but more from a VC hat on, that to me is not the best way to, I mean, it's a good way to validate things and to have those conversations. If you're a seed stage investor or a really early investor, I don't think that makes any sense because you're going to miss a ton of stuff. The later stage you get, the more you're going to do diligence with the investors anyway. So, I'll respond to cold emails, all the time. Personally, I think the other thing is just the point of geography. I spent a lot of time pre-COVID down in Mexico and South America looking at some companies because we have a pretty significant ABI footprint there. And, you're seeing these businesses growing faster than they are in the US. And a really interesting kind of thing that you see in a lot of other geographies, but LATAM in particular, is these are companies that have historically had to, here comes a novel idea, make a profit to survive, so that they're extremely well run and extremely lean by design, because they might not be scaling as crazy fast as the ones in the US, but they're constantly making just more than enough money to kind of survive. And so the second you pour VC or capital gasoline on that fire, they explode, right? Because they're able to get these kind of economies of scale much faster, and they already have the base built to not be a fat organization or anything like that. So I think we're going to see more and more dollars finding some of these like traditionally underserved geographies. And to Gautam's point, I think that the mechanics are still similar, right? Like we talk with some Mexico-based or some LATAM-based venture capitalists, and that's a good way to kind of get insight into that. But we also talk to our corporate teams down there and say, in the same way, what are you seeing? What are the new initiatives you're after? The nice thing is that a lot of times the ones that the VCs really like are also the ones running successful pilots. So you kind of get to see it from all sides. But yeah, I think I would just encourage looking outside of, the more traditional Silicon Valley world to find these types of opportunities. Like in transportation stuff, it's like Chattanooga, Tennessee is a huge hub. And, no one's thinking about unless you're thinking about that specific space, not a lot of people are thinking about Chattanooga. I mean, I know Cincinnati has tons of things going forward as well. So I think just kind of breaking that traditional mindset and saying, look, it's not so much about geography anymore. It's more about what the problems that people are solving. And that's kind of the key forward metric. So,
yeah. One point on geography I'll add related to that is I think the corporations need to do the same behavior. Look in your backyard and support your backyard before you take the easy shortcut of going to one of the traditional places. Pre-COVID, it used to be a lot of fun. Go see Google's campus and Facebook's campus and fly Silicon Valley. But go see what's in your backyard, because I think some of the most interesting entrepreneurs are there. And your company's in that city because 120 years ago, an entrepreneur took the risk on that city. It's your corporate duty to do the same in your city today.
Yeah. Thank you guys so much. That was awesome. I think one of the things I'm taking away for sure is just increasing the number of connections with VCs and entrepreneurs. And even in in Cincinnati here, like I've gotten busy over the years and kind of lost touch with that. So like that's something I'm taking away. And I would just encourage everybody that's on the Zoom, like what's the one thing that you're going to take away from this conversation and commit to doing? And I always say this, but like with commitment comes action. So commit to it, but then don't just talk about it, go do it. And so that's the encouragement. Super excited for, so thank you guys for being a part of our first virtual chat here. We have two coming up. Would love your guys's, if you go to thegaragegroup.com/CMO, you can register, and would love everybody's help spreading the word. We have two, one that's close to me. I have a son, Nate, who he's a senior at Ohio State. And he's getting ready to graduate basically in this one of the most uncertain times, and just wanted to have a really just strong encouragement to the next generation of where the job's going. We have really three strong leaders: Stefan, who's a digital product leader at Kroger; David Jaggi, who runs innovation for Kind; and then Emily Day Nova, who is a head of sales or VP of sales at Vital Protein. So just three really strong leaders wanted to share their career paths, as well as just thoughts and ideas they have for the next generation as they're founding their career. So anybody in your network that you think could find value in that, please share it with them. It's college all the way up to like maybe out of school a couple of years, or maybe even somebody in transition. And then the second chat we have on that's July 8th. And then July 9th is winning in a contactless economy. So we have Pete Blackshaw, who is, he runs Centrifuge here in Cincinnati, which is a innovation and entrepreneurship hub, along with Tiffany Samuels, who is doing a lot of great stuff with Chick-fil-A around COVID. And then we're looking for one more strong retail point of view on that. If anybody knows anybody, send them my way, jason@thegaragebgroup.com. But would love for you guys to register, and then we're committed to doing these bi-monthly. So would love for you guys to jump in and contribute. If you're an attendee of this and you feel like, man, you have a really strong point of view and you want to speak at some point, reach out to me. Would love to consider you, and just appreciate everybody that gave time. But just remember, commit to yourself of what's the one thing you're going to go do and make it happen. So with that, thank you guys again for being a part of this, and hope everybody has a great rest of your week.